Good Monday morning. I'm Zeb Fema, research analyst for Action Alerts Plus, here on the floor of the NYSE with Jim Cramer. Catherine Ross is out today. Jim, let's dive right into it. There is a lot going on, so just tell me what's top of mind.
Well, it's interesting because it's a weekend, and there's a lot of zeitgeist about Epstein. And I can't ignore it because this is what happens when Wall Streeters get together. And what I want to try to do on Mondays is just articulate to people what are the traders talking about. And the traders are all talking about Les Wexner and limited brands. And what the hell went on? What's going on? What is the nexus? Obviously, with Epstein dead, we're not going to, everything opens. There's no more expectation of privacy of an individual. Now, I think Les Wexner is one of the greatest retailers of all time. But I look at limited brands. Obviously, that stock is terrible. I want to know about what went on. But more importantly, this is what, if you talk about what people talk about, they want to know who on Wall Street is caught up with this. Are there people we don't know? Are some going to surface? Because he was, in the end, a hedge fund manager. He was a hedge fund manager. Who covered his account? That's what people want to tell me about. Who dealt with him directly? Did he trade stocks? Where are the stocks? What did he do with the money? I've got to tell you, when I sit down, people do not want to talk about it other than Beyond Meat when they're grilling. Zeb, it is what people are struggling to try to put into context because it's so grim, so terrible. New list of people that came out at the New York Post on Friday. Is that why he killed himself? But people want to know what he was doing on Wall Street, when, where, and want to know about Wexner. And I just think that it's fodder it's the water cooler talk among traders. And I just have never seen anyone be so consumed by this story and who they know and what they know and whether they're thankful that they never met him.
Right. And certainly a story we'll continue to monitor. Jim, let's take it back to the stock market real quick. I see the S&P is down 0.63. It was down 0.8 about 5 minutes ago, so it's a little bounce.
It should have been down much more because Hong Kong. But we can't seem to analyze Hong Kong. We can't analyze negative yields. I've got a piece this morning in Real Money about how hard it is to try to figure out what does it have to do with the price of the price earnings ratio of Darden. What does
you called out Dollar General.
Yeah, Dollar Tree.
Tree.
What's it do with the price earnings ratio of Dollar Tree? And the answer is nothing. So we're really struggling about trying to figure out why negative yields in Germany should hurt us when we're such a magnet for money. I mean, is it possible that we could be a magnet for money and still go down? Yes, anything's possible. You have a lot of people who are fearful, and they will take money out of the S&P, and that will drive all stocks down. There are a lot of people who think the valuation of the market is way too high. Obviously, we wouldn't be buying any stocks for Action Alerts if we thought that.
So real quick, you did jump ahead of me, but let's say, because you did mention the market going down, Goldman Sachs is out this morning reducing estimates for the fourth quarter. Now, last week we were talking about this. Do you fear a recession? We weren't really in that camp just yet. Does this shape change your thinking at all? Is Wall Street just suffering from doom and gloom?
No, I think it's suffering from doom and gloom. I think that when you have unemployment this low, you better start seeing a spike in job losses. A spike. Now, it's not the Tyson food fire, but you need to see, and more than finance on Wall Street, because if you don't see the job losses, it's very hard to envision that we could slow down to that point. I know we can slow down, but not to that point. Not with employment this strong.
Talking about the strong consumer economy, and this is a strong consumer, and this is a consumer economy.
Look, no other country is like us. Right. We have, because of the strong dollar, because of tariffs against us, we've retreated from the world as an export nation because we've not been allowed. And President Trump's trying to change that. He can. I mean, everybody protects themselves from us and dumps their stuff here. That's been what's happened, and we are a consumer economy because why? Our manufacturing was wiped out by the Koreans, by the Germans, by Mexico, and of course by China. And there is a method to what Trump is doing. It's just that there seems to be a bit of madness too.
Right. All right, Jim, let's jump over to our real money stock of the day, which is Viacom. We're getting a lot of news this morning. I'm seeing some talking about the exchange ratio of CVS Viacom 0.6. We'll see exactly what happens there. But what's your thoughts on it?
I was very disappointed that they didn't reach a deal, and very disappointed. When I went over with Martin about choosing stock of the day, we debated CVS or Viacom. Obviously, we own Viacom for Action Alerts, and I am I'm fed up that this kind of thing. Just hammer it out, for heaven's sake. Stop being so obtuse. This is hurting the valuation of both stocks. Viacom had an amazing quarter, and it didn't do a thing for the stock because of these talks. Stop talking, start acting.
Right, and then since we are in the media space, Jim, I'm going to go a little off script here. You've been talking about this stock all morning. What are your thoughts on Roku?
Roku's one of the greatest short squeezes of all time. And the reason it's short squeeze is that there are
And by short squeeze, just for people who don't
meaning that
understand.
people are betting against Roku because Amazon and Alphabet and Apple were supposed to kill them. And they didn't. And that quarter last week was extraordinary. And they're taking share. So people who are short it, because it's very overvalued in terms of earnings, people who are short it are really puzzled about what can bring it down. Now, Beyond Meat was brought down by the fact that they did a big equity offering, and I think that stock is going to flounder a bit. But no one can kind of figure out an Achilles heel of Roku because people are looking endlessly for a cord cutter stock. And there it is. It's a cord cutter stock. There was a piece out this morning about Netflix versus Roku. I thought it was really just extraneous. What matters is that if you think that cord cutting is going to continue, and we do, then you buy Roku. And it's like every day somebody new discovers the stock.
Yeah, absolutely. And so that's pretty much all the time we have for today. But real quick, for those who haven't trialed the club yet at actionalertsplus.com, we do have our monthly members called this Wednesday. Jim, you want to tell people real quick what we're going to talk about?
Look, we're going to talk about the addition of the new names. I'll give you obviously a theme about what's going on in the market. Take your questions for certain. But we're talking about a bear market and how to avoid it and what to do. Because a lot of people keep talking about a bear market. We're going to take it head on. We're going to tell you why we don't think we have one, but why you need to be more careful. And we can say that because if you look at your inbox today, if you're a member, you saw the moves we made.
Right, we did raise a little bit of cash, so get over there. A free trial membership will get you access to the trades from this morning, as well as the 11:30 a.m. call this Wednesday, where again, Jim is going to be going over everything.
Thousands of people. I know a lot of people who are watching the free video are not subscribers, and I don't understand that because there are people who used to pay me fortunes to help them, and now we're more like Goldman when I worked there because it's a recommended list. We're not a hedge fund, but it is the opportunity to get an insight into what we do.
Right, and given the increase in volatility we're seeing in the back half of the year, I would say this is probably one of the most important calls we're going to do all year. All right, Jim, that is all the time we have for today. For those of you watching on TheStreet.com or Facebook, we are jumping over now. We are now jumping over to our members-only club call, only on ActionAlertsPlus.com. Again, trial membership will get you access. Check it out there.